Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com tells us the U.S. stock markets did not end the week on a new high, but did do well overall. He also comments on Aramco's $44 billion IPO. The Corbett reports, James Corbett reports from Japan about the state of China's economy, the potential of Southeast Asia, and Japan's efforts to make their business environment friendlier. Robert Campbell, publisher of the Campbell Real Estate Timing Letter, comments on where the real estate bubbles are in the U.S. and also has some useful personal wealth advice. Plus, at the end of the show, we'll have Company Showcase updates from American Manganese CEO Larry Reaugh, Cypress Development's Don Mosher, and Aben Resources President Jim Pettit. We'll talk to Ross Clark right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABN.V. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forrest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Good to be with Jim.
Aramco, the big oil giant based in Saudi Arabia, making their first initial public offering, raising $44 billion, which sounds pretty impressive. But is it really?
Well, I mean, it's an in-house item here. I mean, they couldn't sell it to the open market for the valuations that they had. And, it'll be listed in Saudi Arabia, and I don't think anywhere else. So, this, for all the hype of the last couple of years about bringing this out, boy, they sure couldn't have picked a worse time. You got oil here sitting at $55 to $60 instead of up at $80 to $100, and you get a valuation on it that the world's institutional investors really didn't have much interest in. So I think they could have done much better for themselves if they had timed it better.
Well, isn't this very similar to share buybacks? Are you really increasing the value of your product?
No, you're not. What you're doing is you're just spreading it thinner. It's, and doing buybacks and spending money on that really just says that you have no ability to improve your business and reinvest the dollars in terms of doing it there. When you're buying your shares, becomes questionable from my perspective. So, but the thing that is working this year is definitely the old adage of looking for an October, November low in the stock market is you enter the best 6 months of the year. And when we've looked at the ninth year in decades, we've looked at the presidential cycle in the year that precedes the election, and both of those examples, when you look back on them, when you get a good oversold reading, as we did back on October the 2nd and October the 4th, then any breakout after that really has lots of running room. And in most instances, you'd be looking at a run that will carry you for minimum of 30 trading days usually, and stretches beyond that. We're at 25 right now since it broke out of the September highs. So there's probably a little bit more running room in here. And then even with a minor pullback, you've got that seasonality around the turn of the year, and there's no doubt that any pullback has a really good chance of then seeing strength as we push through the last 10 days of December into the early part of January.
Gold, is it going to pick up?
Well, this is the seasonal period there that everybody's excited about, because 6 the last 6 years in a row, the market's had a great rally in December, January, February. Go back to seventh year, which was as we were rolling off the top. It even had a little pause there, a little rally. And the year before that, it was strong. So you've got 7 out of 8 years here where the market has had an exceptionally good time period into at least late January into February. But when we look back historically, there is no set of examples that run any longer than this. So I wouldn't be at all surprised that you might get a little bit of a pop. We did at the tail end of the week. But there's a lot of overhead resistance still, and I'd far rather see it take out these supporting lows, maybe get down into that 1400 to 1430 area for a really good test of the long-term moving averages, and then set up for a rally out of there. Because bottom line, once this corrective process that started in September, once it's run its course, then we've got targets up around 1888. That's a nice Fibonacci target objective, and just so coincidentally, comes within about $30 of the all-time high. So I think that on the gold market, you want to be cautious in here. If you want to take that seasonal trade and go with a bit of strength coming off the low, make certain you've got pretty tight stops.
Ross, are you still offering your year-end special?
We've still got that, $60. We'll provide all the research reports that we do between here and the end of the year, and the subscription is available at chartsandmarkets.com, right on the front page there.
Ross, thank you so much for chatting with us.
Nice to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, James Corbett reports from Japan.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2 AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is James Corbett, publisher of thecorbettreport.com. He's speaking to us from Japan, where he has worked and lived since 2004. Welcome back to This Week in Money, James.
Well, thank you so much for having me back on. It's always a pleasure to talk with you, Jim.
James, what are you currently working on with the Corbett Report?
Well, actually, I just finished recording an edition of New World Next Week, the weekly news update series that I do with James Evan Pilato over at MediaMonarchy.com. And since it is Turkey Day weekend there in the United States, for our American viewers, we created a Thanksgiving edition of that, where we talked about some of the positive news stories that have been going around in the world over the past year, because it is important not only to look at the doom and gloom, but also to highlight important stories about how people are taking action to make the world a better place. And I think we can all use a little bit of that in our news feeds, because obviously so much clickbait is oriented towards getting people angry. So we're trying to counteract that a little bit.
And what are a couple of the items that should put a smile on our faces?
Well, one of them that I'll highlight actually comes from Nova Scotia, where we have a story about a person who got fed up with the potholes in his city and was so frustrated by the government's complete lack of ability to do anything about it that he started filling them in himself and taking payment for it from the local population in the form of coffee and cash from locals who were just so happy to have someone actually filling the potholes. So that's the kind of story I like to see, of people taking action into their own hands rather than waiting for something to fall from the skies. Another one, perhaps more serious. People might not know, but just on January 1st, this past year, works that have been copyrighted have been moved into the public domain from 1923. And so anything from the year 1923 was moved into the public domain. They were supposed to be put in the public domain in 1999, but of course, in 1998, Congress hit a 2-decade pause button on that legislation and extended the copyright term for another 20 years to give a 95-year coverage of these works, which is just inconceivable. So we're talking about things by Robert Frost and Aldous Huxley and Edith Wharton and Charlie Chaplin and Buster Keaton and things like this that have been in copyright all that time. I think it is positive because I think the intellectual property regime as it exists is actually a net drain on the economy. And I know that's hard for people to get their head around because we've been indoctrinated with propaganda about intellectual property and why it's so important for the economy. But I beg to differ.
Now, in our terms, China is your next door neighbor. What kind of shape is China's economy in right now?
In a word, rough. It is not in good shape, and there's a lot of different warning signs on this particular road ahead, one of which just came out recently. The industrial profits in China have slumped 9.9% in October year on year, which is the biggest fall in industrial profits in China since 2011, aka the depths of the Lehman crisis. So I think we can see there is definite trouble in the Chinese economy, and it's not just me saying that, it's the Chinese Central Bank, which just this past Monday also came out with a statement saying that they're watching out for unresolved, outstanding financial risks and that China must counter risks from abnormal market fluctuations. So apparently they're stepping up their analysis of black swan and gray rhino events, i.e., black swan events, the once in every 50-year kind of out-of-the-blue things that can totally upturn an economy, or the gray rhino, i.e. the thing that's right there, right in front of your face that you're not seeing because it's so much out in the open. And so they're at least giving lip service to being vigilant guardians of the Chinese economy, but what that speaks to is the fact that they are worried about the headwinds that the Chinese economy is facing right now, and there are significant ones, not least of which, of course, is the current ongoing battle with the U.S., the trade war.
What's happening with the yuan?
The yuan continues to maintain its position, but it is becoming. I think there's the two levels of analysis here. There's a short-term, small analysis of the daily ups and downs that the yuan is allowed to trade in, because of course it is allowed a certain range of fluctuation by the Chinese government, but not too large. But the larger picture is the liberalization of the yuan itself, which of course is the key, the linchpin to the yuan becoming, if not a world reserve currency, I don't think we're anywhere near that, at least into a more stable international currency that can be used to transact internationally. And we're still a long way from that level of liberalization because, as I say, the People's Bank of China does set the range of fluctuation for the yuan peg to float in each and every day. And there's a lot of different restrictions that the Chinese government imposes on it. I think in the short term, things are not looking good for the yuan. But in the longer term, it is being adopted more and more in bilateral trade deals with China's regional partners and expanding as it goes into the One Belt, One Road initiative, and China starts becoming more economically connected with economies all throughout Eurasia, essentially. It is at least conceivable at this stage that we could see the Chinese yuan becoming an actual settlement currency at some point in the not-too-distant future, again, given if they do manage to liberalize the currency a little bit so it's actually freely tradable.
How reliant has China's economy been on the U.S.?
It's been exceptionally reliant on its relationship with the U.S. over the course of its rise as an economic giant over the past couple of decades, in a couple of different senses. Of course, the obvious sense is that the U.S., of course, is a major export destination for a lot of Chinese manufactured goods, and of course they end up on the shelves of Walmart or what have you, and that has been an exceptionally important part of China's growth model, essentially, over the past 2 decades. But there's another, if not unseen, at least less well-recognized part of that relationship, which is the input into the Chinese economy, not just the offshoring of the U.S. manufacturing and productive base that has taken place over the past couple of decades. But with that, a lot of the big Fortune 500 companies that have been shifting their manufacturing over to China have been investing heavily in R&D and research facilities in China. And those types of things usually come with certain strings attached. The Chinese government doesn't just let a foreign corporation open an R&D branch in China unless they get a cut of whatever is developed there. If not monetarily, then just in terms of, well, we get to use this or that technology that's been developed here, or we get to understand what your process is. And by that, I think China has benefited greatly as well over the past couple of decades. So it is hard to overestimate the importance of the U.S.-China relationship to China's current economic position.
Are companies bailing out of China to other Asian nations like Thailand and Vietnam?
There is indications that Thailand, Vietnam are picking up as a direct result of the trade war and the fact that China is teetering at this moment. It seems vulnerable, and so with the same incentives and in the same process as led a lot of offshore manufacturing productivity to move to China, it is now moving to other cheaper nations elsewhere in the region, like Thailand, like Vietnam, like others that seem like attractive investment opportunities at the moment. I don't think it's at the scale or at the size that this will make a significant shift. But if it does portend a trend in the region, it certainly could see the sort of economic power that China has accrued over the past couple of decades, if not completely shifting, at least just being somewhat more evenly distributed around Asia, and especially Southeast Asia, which has a growing population. Unlike most other regions on the globe, the Southeast Asian region is actually young and is booming at the moment, the population. So that is a sign that there may be some economic life there, and that may be one of the draws that is drawing some of that investment away from China and towards some of the more burgeoning opportunities in the developing countries in Southeast Asia.
Is it hard to do business in China? Some business people have told me because of their economic success, the Chinese now feel, what have you done for me lately? Your past trade deals don't mean much to us. They're, I don't know if I want to use the word bully, but they are taking a very aggressive attitude now.
Well, I guess there's the two levels of this. There's the lived experience that people who have business or have experience dealing in business in China have, and then there's what the Chinese Communist Party and the government is saying. And those things may be at odds, because actually just today there was an announcement that China wants to speed up business reforms and investment to boost the slowing economy. So this is about Premier Li Keqiang apparently making some statements that essentially China is going to, as of January 1st of 2020, they're going to start optimizing the business environment to improve productivity and competitiveness. And apparently this will involve some sort of reforms to reduce administrative barriers, lower industry entry thresholds, and eliminate discriminatory practices and decentralize investment decisions, which all sounds like the kinds of things that international investors have been talking about. Wouldn't it be great for many years now? But like many things that we hear out of the mouths of the Chinese Communist Party, let's believe it when we see it. Because as you say, I think the lived experience of a lot of people who have tried to do business in China is that it is extremely difficult to do so because there are a lot of administrative barriers and hurdles to jump over in order to get a foot into the country.
Over the past few decades, has China been printing massive amounts of money to buy up real estate, businesses, and politicians around the world in hope of becoming the next superpower?
I think when you really examine the books, the first decade of the 21st century and the phenomenal growth that China saw at that time was largely a result of actual increase in real productive manufacturing and actual goods being produced. Of course, a lot of that coming from the entry of China into the World Trade Organization and the offshoring of, as we've talked about so much, U.S. Productive manufacturing to China in that period. From the point of the Lehman crisis on, just like the Federal Reserve in the United States and the European Central Bank, the People's Bank of China, the Chinese central bank, also went on a bit of a liquidity splurge and started splashing liquidity into the Chinese economy. And the last decade of economic growth in China has been largely based on that essentially debt-fueled bubble. I often contrast the different models that have been used. The quantitative easing in, say, the United States or in Europe has been largely centered around essentially bailing out banks and making sure that they have a lot of funds parked in their reserve accounts with the central bank and not really productive in any sense. Whereas the Chinese liquidity has been largely based around actually building real infrastructure in China and infamously, ghost cities. And I think a lot of that has trickled down has been offshored in various creative ways by a lot of Chinese who are eager to get their money out of the yuan and into something slightly more stable, obviously flooding into international property markets. And of course, there's, I'm sure, a little skimmed off the top by the Chinese Communist Party in order to grease the skids of various politicians around the world to help improve, essentially, transform their economic clout into political clout. So I think all of those things have been a result of a debt-fueled bubble that has taken place over the past decade. And I think China is trying to grow itself out of that bubble. Definitely remains to be seen whether that's possible, especially given the recent slowdown in growth that we just talked about.
China owes a lot of U.S. debt. Did China purchase this debt with money they created out of thin air in hopes of gaining control over the U.S.?
I think a lot of the U.S. debt that China has bought has been a result of their trade surplus with the United States. So I don't think it was really created out of thin air. It was a result of their the whole process of becoming the manufacturing base for the world, essentially, and accruing all of those dollars. And the question, where are you going to park all of those dollars, for the entirety of the post-World War II era has always been, well, U.S. Treasuries isn't a bad place to park them. And that's what central banks have been doing largely for the past several decades. That is beginning to change, and I think the outlook is changing, and we just had Putin, for example, recently noting that the dollar is no longer seen as a stable world reserve currency upon which to base an international monetary order. It's now seen as a political tool by Washington to wield over its economic and political opponents. And I think China obviously sees itself in the crosshairs now, especially with this trade war ramping up. So I think there is an incentive for China to look for other ways to use its surplus dollars. And so I think that's part of that process that I talked about converting economic capital into political capital. And part of that is this One Belt, One Road initiative to literally physically create the infrastructure for trading throughout Eurasia and the world more broadly. But also, I think, to cement the political and geopolitical ties that will literally through the infrastructure, but also figuratively tie China into the world economy without having to rely on essentially U.S. dollar holdings in order to do so.
Are there any checks and balances to stop China from creating as much money as it wants?
Not really, because China, like every modern advanced economy in the world, uses fiat currency, so they can print up as much as they want. The only check is the natural check of inflation. So there are various ways that they try to ease the spigot so it's not too much, just the right amount, just the Goldilocks idea. And for example, the PBOC has been adjusting the LPR, the 1-year loan prime rate that corporate banks charge corporate clients for new loans. They've been tinkering with that and adjusting it by 5 basis points here and there in order to get just that magic amount. But essentially, if they wanted to, of course, they could just print as much as they wanted tomorrow. And in fact, we're heading in a direction where, I mean, even that figurative idea of printing money, of course, most of the money is not printed anymore. It's just zeros and ones in computer systems in banks' databases. It's going to get even more abstract in the near future because, of course, China is working on its own digital currency from which it will be able to really literally just push a button and make currency appear or disappear at the stroke of a keyboard. And that is the near future for the Chinese economy. So essentially, no, nothing actually constrains them from printing as much as they want.
Why has China's President Xi been instituting more and more currency controls?
I think this is part of the balancing act that China finds itself in, having this influx of foreign investment capital and trying to keep it in the country because, as I say, of course, the people who have managed to wring out some of the benefits of this influx of capital over the past couple of decades are highly motivated to get it out of the country. And I think that should be obvious and obvious why they are doing it. Obviously, the yuan, the long-term prospects for maintaining your wealth in a currency like yuan is dubious at best. So, of course, people are highly motivated to try to get the funds out of the country. And that's why China has instituted stringent capital controls that have not exactly been largely effective, as I'm sure you see in, say, the BC housing market. Obviously, a lot of that money gets out and gets into the form of real estate in BC, driving up prices there. But this is part of the Chinese government's hope to try to tamp down that outflow of capital so that it will maintain in the country so that they can build the domestic economy. And that is essentially the real goal of, I think, the Chinese government, is to have a domestic economy from which they can they don't have to be so reliant on their international trading relationships.
We'll have more with James Corbett when This Week in Money returns.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with James Corbett. James, President Trump appears to be standing up against China, intellectual property theft, unfair trade, among other things. Do you think a U.S.-China trade deal is likely to get done anytime soon?
It may get done in one form or another, but I think the more interesting question is, will it be adhered to and in what manner? Because as we've talked about before in the program, I think there are different incentives here, different incentive structures for, say, a Trump and a Xi, because as we know, President Xi Jinping has recently made changes and moves to essentially make himself president for life if he wants to retain that position. And Trump, on the other hand, will be out, whether it's in 4 years from now or whether it's next year or even before then, given impeachment, who knows. Trump does have a much shorter political lifespan, as it were, and that means that Trump would be happy just to conclude and get a deal and get some piece of paper that he can shake in people's faces and say, look, I got a deal out of China, whereas Xi Jinping can play the long game and can say, yes, we will sign on the dotted line here, and by 2025 we will do such and such. And of course, 2025 rolls around and Trump's out of office, and what do they care? So I think there may be some face-saving measure that might get presented, but I would be highly skeptical, even if that does transpire. And let's keep in mind, we've been promised over and over and over and over for the last several months now, oh, we're just on the verge of some major breakthrough, this deal's right around the corner, and yet it somehow always fails to materialize, but it never fails to give a boost to the markets. That I don't know what investors are sitting there listening to these pronouncements as if they're real, but apparently they do, because record stock high after record stock high, every single time we hear one of these ideas about, oh, it's just around the corner any day now, well, I'll believe it when I see it.
Are other Asian countries benefiting from the U.S.-China trade war?
As we talked about before, I think some of that investment capital that has been stalled or thinking about whether or not China is a good investment right now may be looking at some of those other economies, some of the burgeoning ones, like Thailand, like Vietnam, perhaps Malaysia. There are other places in the region where investment capital may start flooding towards rather than China. So I think there is that potential gain. But on the flip side of it, a slowdown in industrial growth in China is a sign that there is just a slowdown in economic growth generally, because, of course, in the state of the global economy as it exists right now, as we know, China is a bellwether of the global economy. And so a slowdown in trade generally is not a good thing for anyone in the region ultimately. So I think there may be some benefits in the short term, but the longer term perspective, the longer this drags out and the more China is basically dragged down, I think it will end up negatively affecting a lot of the economies in the region.
With the landslide victory for the pan-Democrats in Hong Kong, what's next for China versus Hong Kong?
That's a very good question, and obviously remains to be seen. I think China is highly motivated to maintain, at the very least, maintain the status quo as it's been, which is to say that it is a special administrative region that is not under the direct control of Beijing, at least not yet, but is heading in that direction. And I think if Beijing has learned anything from the last several months, it's that creeping slowly towards the goal of finally taking ultimate control over Hong Kong is probably better in their strategic sense for them than moving too quickly. Because as we all know by now, the thing that sort of sparked this recent round of protests, or at least the thing that's pointed to as the cause of these protests, was Carrie Lam, Hong Kong's governor, advancing floating the idea of a piece of legislation that would essentially eliminate some of the safeguards against people being extradited for crimes that they committed in mainland China from Hong Kong. Well, just that idea, of course, was enough to spark a big protest movement. But when you look at that particular piece of legislation against the changes that have taken place over the past couple of decades in Hong Kong and China's relationship, I think that it's not the definitive huge moment that would seemingly cause such a debate. So I think the slow process of slowly converting Hong Kong over into a sort of Chinese-held protectorate rather than a separate state is probably the strategic way to go, and I think China wants to maintain that. So I think it is not in their benefit to march in with soldiers and tanks and take everything over. I think that would only ratchet things up 100 times. Whereas if they at least seem to step back a little bit and just allow their proxies in the Hong Kong legislature to essentially do their work for them, I think they'll have more success. I'm just speaking, of course, in terms of strategically what China is thinking about, not what necessarily is good for the people of Hong Kong.
Are Hong Kong and China real estate prices collapsing, and could that affect real estate markets around the world?
Well, if Chinese real estate does start collapsing, it certainly could have knock-on effects because, as I say, China has become a driver of economic growth generally in the world. And when the slowdown really hits home and starts affecting property owners in China and people who are invested in real estate, they would be less likely to throw their capital around to other places in the region and across the globe. So that would have a knock-on effect in that sense. But yeah, I mean, essentially there are problems in the Chinese real estate that have been caused by bubble-like conditions that we've seen over the past decade that are coming perhaps back down to reality. So there has to be some adjustments made to the Chinese government's, for example, attempts to crack down on property and to basically control rents and control markets. I think they're going to have to give up that idea if they want to bring the situation generally under control. But again, it's going to be a long process of reform unless there is some sort of catalyzing catastrophic economic event that would motivate them to move more quickly on that.
On 60 Minutes Australia, a whistleblower Chinese spy in Australia says China is involved in infiltrating democratic election systems. Is this a wake-up call for the West?
Well, yes. I mean, let's put it this way. It would be naive to think that there is not infiltration of some form or other in democratic processes, not only by China, but by many, many different actors in every election. And the process goes, of course, both ways. And I'm sure I don't need to inform your listeners, but there have been several studies that have just come out in the past few years, let alone the past few decades, looking at, for example, United States election interference in foreign elections and the dozens and dozens and dozens of times that's happened in the post-World War II era. So it goes all ways and is always happening. Of course, meddling in foreign elections is a highly lucrative act for a lot of countries to attempt to engage in. The real question is, what form does that take, and does it justify the types of things that we're seeing as a result as sort of a crackdown on that, which is certainly I've seen it in my work and interactions online, is that anyone who questions any sort of mainstream political thought in Canada, in the United States, in Australia, in any other Western developed economy is a Chinese agent or a Russian bot or fill in the blank boogeyman of the week. And I think that kind of neo-McCarthyite crackdown on the potential for some sort of interference is probably more damaging than the interference itself, because essentially it is justifying the half of the population or so that doesn't vote for a particular candidate or a particular idea will inevitably start to cast around for the excuse, and the excuse will be, well, everyone who disagrees with me is a Chinese agent, is a Russian bot. And I think that's really where this level of division can really be seen and felt. And I know from talking to a lot of my American friends, that is the situation as it is devolving in the United States, where the political discourse keeps getting more and more ratcheted up, and friends and families are breaking apart over disputes like that. I'm not sure it's quite reached those levels in Canada, but it certainly could if those types of things are brought to the fore and made into the big issue that bigger issue than I think it is. Because at the end of the day, are Chinese agents mind controlling the Canadian population to do this or do that? Of course not. The real question is, how do stories like this affect the psychology of potential voters in an electorate? Are they using that as part of their calculus? And if so, to whose benefit does that redound?
We're hearing about Hunter Biden, Joe Biden, and China. Is this just scratching the surface of politicians from the West and their ties to China's communist government?
Yes, absolutely it is. Yes, because of course this is part of a much, much bigger story, and one that I've at least started to elaborate on my podcast. People might go to CorbetReport.com and search for China and the New World Order, where I talk about some of the historical ties and the buildup of the past few decades, and the ties between finance and financiers and politicians in the United States and the West generally, and the Chinese Communist Party. A very interesting history that's open and openly admitted in part of the history books, but often overlooked. So yes, I mean, Hunter Biden and what may have been going on with the pull of the vice president's office during the Obama years is an interesting subject and one that deserves to be looked into, but it has to be put in its context, in the same way that, for example, the Ukraine and quid pro quo and all of this impeachment hearing stuff, again, only scratches the surface of a very important topic, which is, well, does aid ever come without strings attached? So I think there's a much bigger historical context here that needs to be looked into to really frame this in its proper context.
Are the powers that be in the U.S. and other countries that have assisted China's rise likely naive or corrupt?
Can I take both? Is this multiple choice? Naive or corrupt? I think naive and corrupt, honestly. And I say that because I am certainly not a subscriber to the idea that it's all one giant conspiracy and someone controls everything that's happening. I think that's naive. That would be naive to believe that. But at the same time, it would also be naive to deny that there is corruption that happens on a large scale. It's just that obviously the corrupt conspirators cannot control everything, and I think that's the level of analysis that I come down at. I guess at the end of the day, there are the people who think that their government is too incompetent to pull off anything nefarious, and then there are the people who think that they're all controlling. I come down somewhere in the middle. They're both incompetent and want to be controllers and will conspire to forward their power and economic base, and that's the level of political analysis that I think we have to deal with when we come down to reality.
Are politicians in the West that somehow receive money from the communist Chinese government committing a crime?
Well, I mean, it depends, I suppose, on which country we're talking about and the laws that pertain. I guess the real question to frame this rather than on the legality is the morality of it, and should politicians be taking bribes in one sense or another, under whatever name they are, in order to further the goals of some foreign agent, whether it be the Chinese government or any other government. And I have my own opinions on that. I'm sure your listeners do as well. But I think that's the way we have to frame this, because, of course, the election laws and various laws surrounding what politicians do may change here and there, and there may be loopholes that can be gone through. But I think the spirit of the idea should there be that type of interference, and should politicians be taking bribes in whatever form they come? I tend to think no. But again, I'll let your listeners decide.
Again, from the hardworking crew at 60 Minutes Australia, we hear that human trafficking is a $100 billion a year industry, even larger than the illegal drug trade. Is human trafficking prevalent in Asia?
It certainly is. And I don't know if there's a corner of the globe that isn't touched by this problem. And it is a very important problem. But as always, the question is, how do we uncover it? How do we deal with it? And as usual, I think there are little stories that give insight and window into a much, much larger problem that exists that's largely being ignored. And stories like the Jeffrey Epstein case, for example, give us that window into what is happening at upper echelons of society that most people just have no idea even exists. And to think that that doesn't happen in Asia, let alone any other corner of the globe, I think would be the ultimate naivete.
Does political corruption around the world affect markets and economies?
Of course. In another way to frame that is there any market or economy that isn't influenced or outright bought by corruption and bribery? And I think the answer would be no. I mean, I think that it's endemic at this point, because essentially this is what political office is for. It is a trough of power and money, and who is going to be attracted to that trough other than the swine? And that's going to be corrupt people with their own agendas, and to some extent you could justify by saying, well, this is the way that business functions. You have to pay off this politician in order to get this thing done. Of course, none of us want the system to function that way, but it is how it is functioning. Again, the question is, what are people going to do about that? I tend to think that the trough itself, the trough of power and money, is itself the problem. And until we actually deal with that in one way or another, I don't think it's ever going to get solved. But at any rate, there are things that I'm sure we could do to mitigate that to some extent.
Going forward, are you bullish or bearish on the economies of China, Hong Kong, and surrounding Asian nations?
This is one of those questions that's difficult to answer in the sense that it, of course, doesn't just depend on the economics of the situation. It depends on the geopolitics of the situation. And as I've been talking about on my reports for the last few years, there are ominous signs that we are moving into an era that's very similar to, for example, what we saw in the 1930s, with various protectionist measures going up in various economies that put walls up around different countries, essentially, and beggar thy neighbor policies started to get enacted, which started trade wars, which worsened and deepened depression, which ultimately led to the rise of very extreme parties that ultimately, of course, ended up going to world war. And there are ominous parallels to that type of development. I'm not saying we are necessarily heading there, but it is certainly one way that these types of protectionist trade wars can go. And if it gets to that point, then I think if things get military, there's no question the U.S. is still the world superpower in that sense and can exert its will in whatever way it wants at this point. Although that calculus is changing as China and Russia develop more and more high-tech technologies in the military realm. But still, I think the U.S. has the upper hand. If things remain strictly economic, then I think China, as I've said for some time, I think I'm bearish on their short term, but bullish on the long term because of the strategy essentially to convert economic capital into political capital through the One Belt, One Road. I think that's a strategy that very much could pay dividends a decade or two from now in ways that we can barely conceive right now, if that process is allowed to happen. But that's a big if, because I don't think the United States is simply going to sit on its rear end and watch that develop. So it will be interesting to see the process by which they try to interfere with that. And interesting is not necessarily a good thing. May you live in interesting times, may be the ultimate curse that afflicts the coming generation.
James, thank you so much for being on This Week in Money.
Thank you for having me. It's always a pleasure to talk with you.
My guest has been James Corbett, publisher of the CorbettReport.com. He was speaking to us from Japan, where he has worked and lived since 2004. We now go to San Diego and Robert Campbell next on This Week in Money.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter. You can find him online at realestatetiming.com. He's speaking to us from San Diego. Bob, welcome back to This Week in Money.
Thank you very much. Glad to be here.
Bob, how are the real estate markets looking in the U.S.?
They're improving. They're in the improvement mode. Here's how I've got the call. It's a bifurcated market. California is the biggest real estate market, of course, and it is still in a downtrend. It started going down the end of 2018, most of the states, and now there's been a slight recovery, by some data sources that I follow. I mean, where the biggest recoveries come in California has been in sales. So apparently these low interest rates have sparked people to go out and buy more homes. And that's one of the key indicators that I use. It's a pure indicator that measures demand. And so that has sparked demand. California, however, is still a net negative in my timing model, where that risk of lower prices is greater than, the potential for higher prices. The United States is still hanging in there. They're hanging in there better than California, but they're still on kind of an edge. They're not doing real well. I mean, when you look at the annual rates of price appreciation, I mean, it continues to go lower and lower year-over-year price appreciation. Even though positive, the momentum continues to weaken, Jim. And all that's indicative. I mean, we've had a big housing boom. Guess what happens after a big housing boom? The bust follows. I mean, all you got to do is pay attention to history. So I think it's coming. But in California, I wouldn't touch California real estate. I mean, the risk of losing money is 10 times greater than the chance of making it right now at these elevated prices that homes currently trade at.
Are people moving out of California?
I read mixed reports. If you go online and look at Fred documents, the Fred charting, and say California population, you don't see any decline. It just keeps going up and up and up and up. The question, Jim, is, I'm sure there's an exodus in and out of California. Who's leaving? Because, what is happening nowadays is, just like President Trump moved from New York to Florida, for a lot of reasons, many of which were business and taxes and that kind of thing. I am sure that same thing is going on in California, where wealthy people are going, screw this, I'm going someplace better. We have the highest taxes in the United States, Jim. And if these liberals take over, you know what their proposals are. I don't want to turn this into a political thing, but there's a lot, I know a lot of successful people that said, if one of these far-left Democrats became president, let's say, use Elizabeth Warren, for example, they go, I'm moving out of the country. I'm going to save what I have and keep it for myself. You know what I mean?
Well, Bob, if we're going to be political here, are the Republicans likely to take the Congress, the Senate, and the White House in 2020?
Probably. I think so. I mean, I don't know about, I think Trump's a shoo-in for re-election. The Senate probably is. And I'm pretty apolitical. I don't follow it that closely. That closely because it's just grade school bickering to a large degree. And I get tired of hearing the same crap, night after night after night on the evening news. But I do think that if socialism is the platform they're running on, there's not enough stupid people to get them elected. Anybody with any kind of a brain knows that's not a good idea.
Could any of the U.S. real estate markets be considered to be in bubble territory?
Oh, sure. I mean, I think California's in bubble territory. San Francisco's in bubble territory. That's why my timing model gave a sell signal on that back in September 2018. And I think off its peak value since that sell signal was generated, I think peak values in the city are down like 5 or 6% or so. So, oh yeah, San Francisco's bubble city. Seattle's probably a bubble city. Things just really have taken off in there. Santa Clara's a bubble city with this high-tech stuff. The median-priced home in Santa Clara County, Sunnyvale and San Jose and all that, it got up to $1.4 million. That's a big number. It's a big number, Jimmy. Average for the whole county. That's even more expensive than Vancouver, right? I don't know what Vancouver is anymore. Is the average price home $1.4 million?
It could be. It really depends what part of Vancouver you're talking about.
I'm talking about the whole county, what they call just like Santa Clara County.
Yeah, Greater Vancouver.
You go to Palo Alto, I'm sure you can't buy a home for $1.4 million. It's probably $3.4 million.
Yeah.
But I'm just saying, with that, it's a big number, Jim.
Well, even with lower prices, Vancouver is still very pricey.
I mean, San Diego, for example, the median price, don't you use median price? Where I'm from, for all our listeners out there, our median price, I think, is between $600,000 and $650,000. I mean, relative to San Francisco and Santa Clara, that's about, less than half. But, $650,000 is a median price. That's still really, really pricey. California has super high-priced housing markets, Jim.
Mm-hmm. Does California lead the U.S. real estate market up and then lead it down?
No, doesn't. This time, I think it's a leading indicator, but going back in the 1980s, it was a lagging indicator. I forget whether the 70s or the 80s, we had I was around doing real estate then, and, I've been around this stuff my whole life. And I remember they called it a rolling real estate recession. It started on the East Coast and took 2 years to get to California. And everybody that was in the real estate development business and real estate business, they kept moving west and west and west to stay ahead of the bus. And finally they got to California and it went bust.
I saw a report that said U.S. new home sales are at their highest level in 12 years. Is that actually true?
Yeah, I think it is true. They're 31% year over year. That's a huge increase. I think prices are only up about 5%, let's say, over that 12-year period. But home sales are up 31%. That doesn't make a lot of sense, does it? Mm. You think with that kind of increased demand that prices would be rising at a faster clip?
Well, wages certainly haven't risen very fast over that period, so perhaps real estate for once is recognizing the average person really doesn't have it in the wallet to buy much more.
Real estate, let's talk California.
Okay.
Real estate's a rich man's game, Jim.
Yeah.
Poor people can't afford real estate. If you don't have a home, you can't come to California and buy a home. I mean, yeah, are there exceptions? Yeah. Entry level. Let's just say entry level for the state is around $500,000. In the United States, it's about half of that. So, it's just it's not about affordability. And this is part of the tremendous wealth inequality we have in the U.S. If you live in California, the average, to get in the top 10% of the highest net worths of all Americans, take a wild guess. What's the minimum net worth you have to be in the top 10% of the wealthiest Americans on the basis of net worth? How much money do you need? What's your net worth need to be to get in the top 10%? What do you think?
$1 million?
1.2.
Well, not too bad.
That was a good guess. Now, you talk to people that have $1.2 million. To be in the top 10% is pretty well off, right? You're in the top 10%. You're obviously doing better than 90%. I'd give you a grade of A to A+. Ask people that have $1 million net worth if they feel rich. No. They don't feel rich. But that shows you how low the bar is set for these things, Jim. That's the way I read it. People are in debt up to their eyeballs. They don't have equity, they have debt. And that's the huge economic risk we run. Whether it's cars or houses or whatever, it's the debt. We keep, and the U.S. government, is the perfect example of what not to do, right? We're running $1 trillion+ deficits every year during boom times. Come on, man.
Would now be a good time for people to read your book, Timing the Real Estate Market?
I mean, I'm biased, of course. It's always time to read that book. What that book does is it gives you an edge as far as the best times to buy and the best times to sell. And my theory is, not my theory, that, you know, what I've always believed to be true and what I do, I don't play any game unless I have an edge. If you don't have an edge, don't play the game. Find something you're good at. You're better than other people, that's the game you want to play. And so it gives you an edge. It gives you a timing edge. And timing is a huge, huge, huge factor when it comes to being successful in anything.
U.S. stock markets keep hitting new highs. Do you think this momentum can continue for much longer?
Yeah, I do. I think it can continue. I think it's going to continue. I wouldn't be surprised to see 40,000 on the Dow. And it's all flight money. It's all flight, not all of it. A lot of it is flight money. Coming in from China, coming in from Europe. Big money, rich people that have money. They don't want to be in Europe. They don't want to be around the euro. They don't want to be in Japan. They don't want to be in China. You know, and these negative growth areas or Venezuela or any place. They'd rather be in the United States. So that's flight capital coming in, and that's supporting the money. It's supporting the market. It's supporting the dollar. Before you can buy U.S. stocks, you have to own U.S. dollars. You don't buy Microsoft with yen. So that's how I see that. And I do. And I see this as being wow, just a giant economic bubble that's being fueled by the Fed and low interest rates at the expense of the average American that has saved money to use during his retirement years, or the pension fans that need higher interest rates to support the promises they've made with respect to future payouts. 2% interest on a bond doesn't cut it with those pension funds, Jim.
How strong a role does human nature play in real estate markets and stock markets?
Oh, it's such an, if it's one thing I've learned in the last 5 years, and I'm 72 years old, as you know, but maybe some of our listeners don't, is that human nature, that's part of your edge right there, boys and girls. Human nature. Human beings, left to their own human nature makeup, will do exactly the wrong thing at the wrong time. They will buy when prices are high because everybody else is doing it, and they're afraid to buy at the bottom when prices are depressed and attractive because everybody's afraid to do it. They're such herd followers, it's unbelievable. So the farther you can break away from human nature in making business and investment decisions, the more successful you're going to be.
Yes, when you
it's
say,
hard.
yeah,
most people don't like. It takes discipline and rules. Do most people live the rules by a system or a set of rules, or is it day by day random decision making?
Well, when it comes to real estate value, somebody said if a sack of potatoes today was $10, but tomorrow it was $5, would you buy it at 10 or 5? You'd have no problem with potatoes. But how come when it comes to real estate, people do the opposite?
Exactly. Everybody loves it when all of a sudden it's dirt cheap and there's no buyers. All of a sudden you're at the near the top of a bubble. There's multiple bidders for that same property at double the price you could have bought it from 6 years ago. Is that the smart way to invest? So that's why most people don't. That's why most people aren't good investors. They let their emotions, control what business decisions they make.
What percentage of people experience success in life?
Of all Americans that reach the age of 65 years old, only 4% are comfortable financially at that age, which means 96% are not. That's how hard it is. And it's not only because they don't have enough money because they made bad investment decisions. It's other things too, of course, that nobody talks about, Jim. It's like people get divorced at the wrong time. People lose their job. And all of a sudden they need to sell their most people lose their job when the economy's up or when it's down? When it's down. Okay, right. You lost your job. Now you need money. Now you have real estate, let's say, or stocks. Are real estate and stocks likely to be up or down during an economic downturn? Down. So now you're forced to sell during the downturn. And, or you get a divorce because you're in hard financial times. Those occur during bad economic times. And so those things you can't control, let alone be concerned with little things like here in the United States we're dealing with now like rising opioid use and alcoholism. What's that all about? How come people are doing that? I mean, that can ruin your life, of course. So there's all these pitfalls along the way, that's not only with business decisions, but just life in general that tend to stack the odds against you. And that's why I tell people, if you don't have an edge, don't play. Find something you have an edge. I mean, don't think you're going to be a whiz in real estate, a whiz in the stock market, know gold better than anybody else, know how to trade futures than anybody else. You're not. Find one thing you're really good at where you have some kind of an edge, kind of like counting cards in blackjack. Play that edge over the course of your lifetime. Don't get divorced or hooked on drugs or alcohol, and you should be okay.
Debt slaves and debt slavery, is there an antidote for that?
Oh, yeah, it's called the 1930s Great Depression. Soon as people quit using debt to make purchases, we would have the biggest economic downturn since the 1930s, because that's exactly what happened. That's what's supporting the economy, cheap debt, and it's going to end up ruining us, Jim.
Is the smartest thing a person can do for retirement get rid of all your debts?
I'm not so convinced of that. I mean, let's say you have a mortgage. Let's say you have a mortgage at 4%, and you're a pretty good investor and you can make 10% on it. Why pay off a 4% mortgage if the opportunity cost is losing 10% on investments you could make? So no, I would say no, not always. But if you're a terrible investor and, can't even make 4% on your money, yeah, that's better than losing money. Pay it off. And of course, you can't, this is all from an objective intellectual standpoint. Everybody is so different. What makes them feel good? What makes them feel good, how they feel good. It's a very, very individual decision to be made. If you're okay financially and you're worth a couple $1 million, pay off your house. I mean, you pay off your house, it's worth, you own your house, no debt, that's worth $500, and you got, $500 or $1,500,000 in other assets to invest and live on. That's fine. You're going to be okay.
And of course, if your house is paid off, you can get a reverse mortgage and get a retirement income that way.
I don't trust those at all, Jim. What little research I've done in those, anything that has an insurance company behind it, I don't trust it. I mean, it's just, for one thing, it's really limited. I mean, here in California, the average price home is, let's say, $500,000 or $600,000. If my memory is correct, the biggest reverse mortgage you can get is like $260,000 or something, Jim. I mean, you can't get a reverse mortgage. Let's say you're real super successful and you live down here in the beach in Del Mar and your house is worth $3 million and obviously you decide to get a reverse mortgage on it. Yeah, you can get a reverse mortgage for $300,000. I mean, is that going to support that lifestyle that you worked hard to achieve? No. Got to sell your house. So that may be true for the average American, but it's certainly not true for wealthy Americans that own expensive real estate. So, but anyway, what I've learned about it, it hasn't, I think that's more of a form of desperation than anything else. I mean, you can even get in trouble with reverse mortgages, Jim.
Yeah, if the value of your house suddenly plummets, what do you have?
A lot of things. And let's say you want to get out of it, then that's expensive. So anyway, I see there being more negatives than pluses for the average American reverse mortgages. Thing that's promoted that heavily on TV, I distrust.
Yeah, actors know so much about real estate.
Right. All those people in Hollywood, I've kind of checked it out a little bit, those old actors and stuff like that, they've all got a net worth of between, 20 and 25 million bucks. So, they're not poor people by any means. They're not super rich, but they're not poor either.
Well, you should be able to eke out, an income of $50,000 per million?
Yes.
Yeah.
Easy.
Even if you just stumble into it. So if you got $25 million in the bank, I think you're doing okay.
I think you're doing fine. I won't lose any sleep, I don't think that person will be out on the street eating out of garbage cans anytime soon.
Mm-hmm. We'll have more with Robert Campbell right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Robert Campbell. Bob, is the U.S. likely to remain the superpower of the world?
I think so. I mean, just because of our sheer size. I mean, I think if it came down to pound for pound, I would say, Russia packs a more powerful punch than we do from weaponry standpoint. And, but we just have so much more of it than they do. I mean, it'd either be us or Russia, and where Russia and U.S. are in a stalemate, if it ever became into a nuclear exchange, I mean, we would both wipe each other out, right?
And, of course, you have China in the mix now.
China's not going to wipe anybody out yet.
Somebody told me China is much more interested in business than it is in military might.
Yeah, they're smart. They're smarter in that regard. I mean, why we want to rule the world is like beyond me. I like the way we were before World War II, where we were isolationists. We'd only attack people if they attacked us. That's the defense posture I wish we'd adapt.
Mm-hmm. And the U.S. only got into the First World War, nothing to do with the torpedoing of U.S. ships, but they discovered a plot where Germany would pay Mexico to attack the U.S.
Right.
And that's why they got into the First World War, an actual security threat to your homeland.
Right. I mean, so, I know wars, you're never going to stop war, Jim. It just goes on and on and on. It's just going to happen. It's just an expense we all pay. That's part of human nature, right? You get money, and all of a sudden, you get greedy. You want more land. You want more power. That's human nature. Human nature isn't one where you accept whatever you have, be it small or large. That's not human nature. Everybody wants more.
President Trump has moved his principal residence from New York to Florida. Could that move have a psychological effect on the New York real estate market?
No, I don't think it'll have a psychological effect, but I think it's a consequence. I mean, anybody with a brain has to look at it. They see what's going on, how badly managed New York is, how high their taxes are. I mean, and some of this, especially some of this expensive real estate. I mean, have you seen some of this expensive real estate, these condos and things on Central Park and retail space in Manhattan? I mean, some of this stuff is way, way down in the last couple of years. Retail rents in Manhattan, the average retail rent in Manhattan is down, 40% in the last, a couple of years. What does that do to the value of that property? And condos are down. It just got so overpriced. And so, but I think a lot of it has to do with taxation too. I mean, I know New York is a really high, they're going after your money big time. They're a socialist state, just like California. And Trump probably said, I've had it with this. And do you think New Yorkers love Trump? I'd move out too if I was him. Does he have a nice place to move to?
Do tax and spend governments cause greater downward pressure on home prices following the bursting of a real estate bubble?
Yes. I mean, let me just say that increasing taxes does nothing good for anybody that owns an asset. In Chicago, they've raised property taxes. Their pension funds are so far in the hole, we're talking 80% in the hole. They've increased property taxes in certain parts of Chicago by 50% in the last 5 years. That's why Chicago is the only state in the United States that has a net outflow of population in the last 2 years. So people are leaving. It wouldn't surprise me. Look, it happened to Detroit. If you went back 40 years and said Detroit will lose two-thirds of its population in the next 40 years, people would laugh at you. Detroit, yeah. I mean, that was a symbol of American industry. That could happen to Chicago, where they are so mismanaged, so out of money. The pensions for the government workers are so underfunded. They just keep cranking up property taxes, and pretty soon, who's going to leave? The rich people are going to leave. They're going to go to Florida. They're going to come to California. They'll go to a place, or Texas or something. But they will do that. So you got to be careful with that. I mean, that's what ultimately led to Detroit's downfall. It was the corruption and the socialist government. I mean, it's no different in Chicago. So that can happen anywhere. And you just don't know what's going to spark that, how bad it's going to get. I mean, you start you start taxing rich people the way that some of these guys are taxing rich people, all of a sudden, let's say you're a guy with a business and you run, you employ 100 people. It's a good business. And all of a sudden, you could sell the business, get out of the business, close it down, and take your $50 million and do whatever you want to do. If all of a sudden they start making your life miserable by taxing your money, taking your money where it isn't a profitable business anymore, you'll just shut the damn thing down, take your money, and go retire and do something else. I mean, that's human nature. That's why you got to be careful with this stuff, Jim. I mean, this isn't the first time in history stuff like this has happened.
Do you have some wisdom you can share with us?
I've been sharing wisdom with you the last 60 minutes, the last 30 minutes. Always have a plan B game plan. Always have a plan B. Ever since I was a little kid, starting out, I always thought I'd be successful. I was ambitious, worked a lot, smart. I'm not as successful as I thought I was going to be. Interesting how that happens, right? But I always had a plan B. I said, if everything in my life right now goes to hell, what would I do? And I'm always thinking about, okay, what would I do? So if that was the case right now, I would have a plan B. I said, if my publishing business just stopped working, just went broke, I couldn't make any money from it, what would I do to survive? My best class in college was mathematics. You need math classes to get into a good college nowadays. Most kids in high school are horrible at math. I would tutor. I would go to a JC and bone up on for 2 or 3 quarters on calculus and algebra and all that, and bone up on it. And I'd tutor these rich high school kids that want to get into these expensive colleges at $75 an hour, and show them how to understand and do math. I could make $150 a day cash every day easily, only working 2 hours a day. You know what? I mean, with my financial condition, what it is right now, owning a home and not having other things where I don't have loans against it, you just need income. I could live on $150,000. I could live on $150 a day, cash. And so whatever yours is, I mean, let's say, for example, in your situation, Jim, let's say the whole radio interview industry shut down. You go, I'm out of a job, and the industry shut down. What would you do? You want to start thinking about that stuff in advance. I mean, it's kind of like, and just kind of planning that way. And it's not like you're a doom and gloomer. It's like you're a survivalist. If this happens, what am I going to do? It's like being in a jet airplane, and all of a sudden you're in simulators, and all of a sudden you lose an engine. Did you count on losing an engine? No. Is losing an engine bad? Yes. What are you going to do? They teach you what to do, right? You know what to do so you don't crash the airplane. It's kind of like that with other things in life. So that's kind of this month's words of wisdom that I've kind of recognized and said, yep, I think plan Bs are always a good idea.
Bob, do you have any health tips for us?
Oh yeah, always. Even though I'm in the money business, ladies and gentlemen, health and fitness has been my number one investment since I was born. I came from a health and fitness family. I've remained in health and fitness. You gotta stay fit. You gotta keep your weight down. You gotta stay healthy. You gotta stay strong if you're a man. And that is the foundation of everything. That makes everything else in your life better. It makes you smarter. It does everything. Because what's the point of getting older and having a few bucks if you're in terrible health? There is no point. You might as well jump off the building. I mean, so that's the first thing. I mean, and is it hard? You're damn right it's hard. It's the hardest thing I do. But it's the best investment. I've achieved the highest returns of anything from health and fitness, Jim. It fuels everything in my life that's great. It gives me energy. It makes me smarter. People are more attracted to me. What man doesn't like having women look at him because he's in good shape, looks good? We all do. And that's really, and all those kind of things, it just makes your life better in so many ways. You have a better attitude. You don't let little shit bother you at all. And you just kind of push your way through life like a fierce warrior. You're not hurting anybody. You're just the man.
Bob, what's your next seminar about, and where will it be held?
I haven't announced a new seminar, Jim. Thank you for asking, though. I just haven't, because I've given 2 different seminars over the last, 3 or 4 years, and I'm still rethinking what I want to do. It may be something like, for all my followers, that I may just have a get-together where I speak, get together for 4 hours, where I talk for 2 hours on market conditions, what to do, and all of a sudden we open it up to a brainstorming kind of a session between everybody in the crowd where we can talk business, because most people that subscribe to an investment newsletter tend to be smart and wealthy people. It's not, they just do that. So I have a lot of smart followers. So I'm kind of considering that. And especially in today's society where everything is digital, everything's over the phone, you text, nobody calls anybody on the phone anymore. You don't look at anybody in person. You just do videos and stuff like that. That human, actual physical human action is healthy, Jim. And people recognize that. That's one of the reasons I give my seminars and give speeches. I make eye contact with the people that follow me. I'm not in a digital business. I'm in a face-to-face, I love being in that business where you can make a real influence on people's lives because they can see it in your face. They can see your energy. They can see you. I think those are the kind of benefits that people nowadays are losing, especially the kids. They're losing them. And you know what? I just wonder how this is going to work out for these kids. Human beings need to interact with other human beings on a physical basis. See each other eye to eye. And I really like that. I think it's healthy, and I think you can learn a lot. And if I ran the show, I might do something like that, but I still haven't decided. So, I'm kind of leaving that up in the air right now.
How can people find out more about your newsletter and your book?
They can go to my website, realestatetiming.com. Realestatetiming.com. No dots, no dashes, no fancy words. Realestatetiming.com. They can buy my book. It tells you exactly how to time real estate markets. I don't hold anything back. It's an exact formula that I developed 20 years ago and still use today. Hasn't changed the book. In fact, I just updated the book with the 5th edition to show, and even though the contents of the book hasn't changed, the reason I keep updating the book over the course of the last 18 years is because I want people to show that my timing model still works. It's worked for 18 straight years. It's worked for 40 years. And so it's like proof, it's like Nassim Taleb says, don't ask if something makes sense, ask if it works. And there's the proof, it works. Yeah, it's work. So there's your edge. There's your edge in real estate, ladies and gentlemen. Right? I can't give you an edge in playing poker because I don't know how to play poker. But if I was going to play poker on a serious level, I would learn how to play poker so that I had an edge. Who is it? Warren Buffett said, if you don't know who the sucker at the poker table is, it's you.
Bob, thank you so much for being on This Week in Money.
Thank you very much, Jim. You have a nice holiday, and we'll talk again soon, okay?
Okay. My guest has been Robert Campbell, the author of Timing the Real Estate Market and also publisher of the Campbell Real Estate Timing Letter. You can find him online at realestatetiming.com. He was speaking to us from San Diego. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, James Corbett, Robert Campbell, and thank you for listening. If you have any questions for our guests or for the show, you can send them to info@howestreet.com. Now stand by for Company Showcase updates from American Manganese President Larry Reaugh, Cypress Development's Don Mosher, and Aben Resources CEO Jim Pettit. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with American Manganese CEO and President Larry Reaugh. Welcome back to the show, Larry.
Jim, it's always good to be on the show.
Larry, you've been pretty busy there at American Manganese. 2 releases out this week. What can you tell us about it?
Well, we've had 2 releases. You're correct. And the first one was that the company had engaged GRA Enterprises for investor relations. And as the market can see, they're very effective. And we're happy to be aboard. We got a very good price on it. And we have a 6-month campaign underway, which has resulted in quite a few exercise of warrants. So, that kind of beefs up our treasury, in which, by the way, we're in good shape. We won't be looking for any serious money probably till maybe as late as March. And we also announced on the 27th that we began negotiations with Kemetco Research, because we've had some ballpark numbers that have been out there and some ballpark timelines. And, but initial discussions with Kemetco Research is telling us that a lot of this equipment's going to have to be fabricated and designed to be fabricated. And that takes a lot of extra time. We've been held up even on our pilot plant when we're out for a fabricated piece for up to 3 or 4 months. So, we'll come up with a more realistic timeline, and it'll be further down the road. But that's all I can really say about that now. And as far as cost goes, when you're fabricating materials, that may increase the cost somewhat. So, these are things that we have to deal with as they come along. And we'll be meeting this month with Kemetco to, get the cost of a preliminary assessment, similar to the PIA. And so, that's what we're looking for, because that'll put us in a good standing position with negotiating with potential partners or financing. And so this has got to be done before anything else is done. And I'm not sure exactly how long that will take. Once we get into it, we'll have a better idea. But then we'll also have a better idea after we discuss this with Kemetco, and they give us a budget and an estimation of what it's going to cost to basically move ahead with this project. But I can't say that I'm not unhappy with everything that's happening in the company. Certainly, the stock is much more active. The fact that the people like Eric Sprott have joined in on trying to get the uptick rule reinstated is good for all the companies. Certainly, I can see the benefits for us. Currently you just don't know how the day is going to finish because of the not being an uptick rule in the exchange. So those are just a couple of the things that are happening. The other thing that's been happening is there's a lot more news coming out from recycling companies. Sometimes I think that we must have set the pattern on how you make the news release, because they seem almost very familiar in their structure to our news releases. And but we're happy with the fact that we do have 2 patents. Everybody else is either patent pending or doesn't have a patent, and they're talking in a situation that took us. If you want to take a look at the total time it took to develop this process, it started back in 2009 with manganese, and we've just moved on and on and on and on from there. So it's been a number of years to actually nail down the process. It wasn't something that happened overnight. We had some pretty good ideas on the second process from the manganese process because, we had a guideline there, and that guideline was telling us we should be able to do the same with the cathode materials. So I think everybody should be happy that those patents are in place. Eventually this will become a field where there's going to be other people participating, whether they'll be able to do it in the same fashion that we hope to do it, and that is that we hope to be able to set up a plant that has nothing that's going to go into the environment. No bad stuff. And, we have a closed circuit. Everything's been working out well with that. We initially got 100% recoveries, but that was under very ideal conditions. And now that we're working with disassembly of even the scrap material, that introduces, problems on its own. You get losses on the aluminum strips. And, but the purity is very important. I mean, you can't sell an impure product to a battery manufacturer. And, the alternate thing for us to do would be just to produce the metals and sell them, which would be the simple thing to do. But we want to have the biggest advantage to getting a market out there for our end product. So that's why we're striving very hard to get high purity material and the highest possible recoveries. We've got a method of actually shredding the scraps and the sizing them and everything else. That's proprietary, and we're not putting that out there. But the thing is that we do have a method that gets us the best results. And when we get some material that's prepared by somebody else, and we're at the mercy of actually, getting less recoveries, as you've seen earlier on in the mid 80s and up to 90%. So we can deal with that. Anybody that's going to be sending us scrap that's going to be done, they'll have to follow our standards of sizing, and that should make a better product at the end of the day. So our news, we're almost closing out the year. Our news has been on an uptick. We still have a lot of calls coming in. We still have a lot of potential financing proposals. And we are not sure which way we'd go, but my preferred way to go would be on a convertible debenture to build the plant, or bring in a partner to put up a big chunk of the money to do that for an interest. So rather than keep going to the market for dilution. So we're going to try to stay away from as much dilution as we can. But sometimes, especially in the last year, the only solution was dilution. And so we had to go with that. But you had to make up your mind, bite the bullet, and do it, or else we'd be sitting back a year behind us. And, we did that. We bit the bullet, and it took a few months to get our placement completed. But we did, and now we're still in a fairly good financial position to move ahead into the new year. So that's the good news I've got for today. Especially with hopefully with the regulators deciding that maybe an uptick rule is a good idea, and so that we can get the not only our stock but the venture exchange back on a positive manner. Right now, it's looking like the end of the days for it. So. Which in case we'd have to probably move to the U.S. exchange. But the point is that, there's things that can be done that can, save the exchange. I can remember when we had the big drive to get down to a single entity on the Vancouver exchange, and, that was getting rid of the Alberta, Saskatchewan, and the Ontario over-the-counter and everything else. And now we got so many platforms, I can't even remember how many there are out there. So we should get back to a single exchange, and that way it can be better monitored, and you can have a better idea of the bid and the asks. You don't know what's happening on the platforms. And it gives us levels of playing field, which would encourage investors to come back into the market.
Larry, where are you traded, and how can people get more information about American Manganese?
Well, you can go to our website at AmericanManganeseInc.com, and you can, we're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. You can reach the company at 778-574-4444, or if you want to talk to me, you can email me at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
You're welcome.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on November 29th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Don Mosher, corporate consultant for Cypress Development. Welcome back to the show, Don.
Always a pleasure, Jim.
Don, where other jurisdictions where lithium produced are going through economic and political turmoil, you believe you're in one of the most stable environments on the planet.
Yeah, we're in a jurisdiction, the United States, to start with, that has no lithium production at all to speak of. I mean, in Clayton Valley, where we're located, the Silver Peaks facility has been producing out of brines and evaporation ponds for over 50 years. It was the first brine project in the world, and now it's owned by Albemarle, one of the largest producers in the world. But it only produces 3,500 tons a year, so it's very small. Other than that, there's no production in the U.S. And if you take a look where the production comes from, either the hard rocks in Australia or the brine mines up in the Atacama Desert, you've got a situation where large projects that were going to come on stream are being put on care and maintenance because the lithium prices come down. In the meantime, there's water concerns in the Atacama Desert that are causing serious civil disobedience and upheaval. And here we are with a claystone project in Nevada, most favorable mining jurisdiction in the United States, offering an independent lithium source to the battery producers in the U.S., where they can really secure a domestic supply. So I think we're going to be looked on very favorably when we complete our pre-feasibility study and release it in January.
Where is all this action taking place?
So our project is in Clayton Valley, Nevada, very close to Reno. And we trade on the Toronto Venture Exchange under the symbol CYP. People can get all the information they need on our website, CypressDevelopmentCorp.com. You can find all our preliminary economic assessment, all our news releases, everything else are there.
Don, when people ask questions of Cypress management, what are the most frequent questions?
How much is it going to cost to get this into production? We're looking at about $450 to $500,000 or $500 million to put it into production. One of the biggest costs being a sulfuric acid plant. But if you compare it in relationship to the hard rock, we're 50 to 30% of what it would cost to put a hard rock deposit into production. And I guess the other question is, how have you taken it so far, so fast, for so little money? And it's because our management is a very small team headed up by Dr. Bill Willoughby. He is a mining engineer and a metallurgist, and he is really done a lot of this on his own, just hiring consultants on a need-to-use basis. So it's really reduced our overhead costs significantly.
Don, thank you so much for the update.
Thank you. My pleasure as always.
My guest has been Don Mosher, corporate consultant for Cypress Development. I'm Jim Goddard. Our conversation took place on November 27th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO and President of Aben Resources. Welcome back to the show, Jim.
Thank you very much, Jim.
Jim, you've had a really, really busy year of drilling. How close are you to wrapping things up?
Things are wrapped up. We've actually finished now. We just put the final results out of, I guess it was a total of 25 holes for the season. And, it was a good program. It wasn't the high grade that we'd been working on the last few years, but you can only do so much in that high grade zone. And you got to move on and figure out where it came from, or is there more to it? And so ultimately that's what we sought to do this year, is to increase the mineralized footprint in the boundary zone in general, not just the high grade north boundary zone. We're testing for outlying faults and shear structures that have potential mineralization, which we had lots of that, and to ultimately, I guess, vector into a heat source or mineralizing source. That would give us some indications as to where it's coming from. What exactly are we looking for, and what kind of structure? So, in that respect, we did get a lot done. Just a couple of highlights, I guess, we could talk about that we achieved for the year was, the 25 more holes. We've drilled about 20,000 meters so far in the boundary zone, which is, 6 kilometers north-south by 2 kilometers east-west. Lots of new rock samples, lots of new soil samples, and 173 line kilometers of airborne mag. That geophysical survey was kind of driving the program this year to give us indications as to, what we're looking for in terms of the outlying faults and shear structures and that sort of thing. So in that respect, I think it was very successful. I mean, as you head south from the north boundary zone, which is the high-grade zone, we extended the mineralization to the south by about 700 meters. There's a corridor that shows up, and you can see it in the drilling in the holes. The mineralization, albeit lower than the high grade, ranges from trace to maybe 2 to 3 grams, but they're broad intersections, and all the holes have it. And it's all relatively shallow, and that corridor is still open at depth. On top of that, as we recall, the south boundary zone we drilled last year, that was a different type of mineralization. It's polymetallic. Well, there's a corridor there as well. It extends about 500 meters by about 200 meters wide. And it's got similar pattern there where you've got broader, lower grade mineralizing effect. Like you get these broader holes. And so it really changes, what we're seeing and what we understood when we were only drilling in the north boundary zone, because that was quite unique. We've managed to complete 100% earn-in on the whole project now, the whole Forrest Kerr. We've got 100% of that now. And, there's a lot of new targets and ideas that they're sifting through right now to give us a plan for next year.
Where is all this action taking place?
Well, we're up in the northwest quadrant of British Columbia. It's called the Golden Triangle. We've been there since 2016, and it's been going quite well.
Can you give us a bit of a background for Aben Resources?
Well, we're a gold exploration company. focused primarily in Western Canada, which would include northwestern British Columbia and the Yukon. And I'm looking again back at the Saskatchewan-based Chico property, which is just on the southern border of SSR. You know, they bought the CB mine and the Santoy deposit, and they're extending their interest to the south. They're drilling to the south, and it would come right onto our property eventually. But we're starting to look at that again. We had a little look at it a while back. It's still available to us if we want to move forward with it. And I'm going to Saskatoon next week to there's a geotechnical show there. And my guys are meeting with the First Nations guys there.
How important is it to have a good relationship with First Nations?
Very. We thought we had a really good relationship with this First Nations group in Saskatchewan a couple of years ago, and we went and we had all the permits in place. We talked to them, but I think we walked right into the middle of an election for band council. Got a little heated, so we just backed off. They've indicated to us they'd like us to come back, et cetera, et cetera. So we're going to try to do that. I mean, I've got really good relations with the First Nations in British Columbia, the Tahltan, up in northwestern BC, exceptional relationships with them. So, you know, it's something you have to do. And, you know, there's hiccups along the way to be expected, I guess.
Who are the principals behind Aben?
Principals behind Aben? Well, the board is Ron Nedlisky's the chairman. I'm the president and CEO, to, you know, make most of the management decisions. Tim Termundi is on the board. He's very active, actually, with me. And, you know, those two have a big history in the Golden Triangle area, as Ron was in on the discovery of Snip and Eskay Creek, and Tim's first jobs out of geology school at UBC was working for Ron up there. And then Cornell McDowell is running the program, and he's got it running very efficiently for that neck of the woods. To come in at the price per meter that we are is pretty unheard of.
Jim, where are you traded and under what symbols?
We're traded on the TSX Venture under the symbol ABN. We're in the OTCQB under the symbols ABN.AF, and the Frankfurt Bourse under E2L2.
And where can people find out more about Aben Resources?
Best place is to go to the website at ABNresources.com.
Jim, thanks a lot for the update.
Anytime, thanks.
I've been speaking with Jim Pettit, CEO and President of Aben Resources. I'm Jim Goddard. Our conversation took place on November 28th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.